Good evening, friends. Welcome to Nifty Indicators. It's easy to make money. Today, we will try to understand options a little more. Finally, most of the traders like to trade in options, so we need to have a little more in-depth knowledge about options. So let us try to understand options a little more. Let me start with the slideshow. So look at these few slides and let us discuss it after that. So as you can see, I am trying to explain the options a little in depth. Options are originally meant to be a tool to hedge against the erosion of value of assets we are holding. Options derive their value from the spot price of the underlying, in this case Nifty. As such, it is only a derivative and not a direct instrument like a stock. Trading in options is quite risky and not really suitable for all. Trading in options is quite speculative, and that's why we need to trade in options only with the money that we are ready to lose. Here in this chart, I have marked A to K, and in the next page I have given the details of what it is. Let me explain to you. A is the spot price of the Nifty, of course normally underlying, in this particular case Nifty. B is giving the detail of the option, that is, this is option Nifty, expiry date 13th October 2022, strike price 17,100, call. C stands for call. C is giving the last traded price of today, that is 12th October 2022. D gives the timestamp, date and time, 12th October 2022, 15:29, that is 3:29 p.m., 3:30 p.m. E gives lot size of Nifty options or Nifty futures is 50. F gives options type, that is with whether it's instrument type, or F gives instrument type. In this case, it's options. G gives the expiry date, that is 13th October 2022 in this case. H mentions option type, call or put. C means call. I gives strike rate. In this case, it's 17,100. J gives open price, previous close, high, low, etc. And K gives VWAP, that is volume weighted average price. So these are the details that are normally needed when we are talking of options. This is the details of these. Now, let us start looking at the options a little more in detail. The options are two types, puts and calls. Puts are basically buying puts is bearishness, buying bearishness. Buying calls is buying bullishness. And options, any option at the end of the series, in this particular case 13th October, that is tomorrow, this option will expire. Now, every option has a strike price, and Nifty's options have a strike price in the interval of 50, that is 17,000, 17,050, 17,100, 17,150, etc., etc. Incremental value is 50. This particular option is for the strike price of 17,100. Today's Nifty closing price is 17,123. So that makes this particular option at the money or a little in the money. That is, the strike price is lower than the prevailing last traded price. Last traded price, this option has an intrinsic value of 23. That is, last traded price minus the strike price is the intrinsic value. When the intrinsic value is positive, it is in the money. When the intrinsic value is a negative, that is when the strike price is higher than the last traded price of the call, it is intrinsic value is negative, that is out of money. So that is a little in the money, 23 points in the money call, and this expires tomorrow 3:30. Either this needs to be in the money, and if it is out of the money, the intrinsic value being 0, this will have no value. The value of this particular option will become 0. If it closes above 17,100, that is the strike price, then it might give us some value. So either we need to square off before 3:30, or the stock exchange will decide what is the closing price, average closing price, and decide what is the amount that we should get for this particular option. So option is a risky proposition because there are two aspects to this. Normally for any stock, when we are dealing in cash segment, we need to look at whether market is going up or going down. Our script is going up or going down. If it is going up for a call, we'll keep getting better price. If it is going down, we keep losing. In the case of options, in addition to the direction of the option, direction of the price of the script being in our favor, in addition to that, time also is a major factor, because tomorrow, the expiry date of the series, at the expiry time, all the out of money calls or out of money options will become 0. That is why for options, direction as well as the time factor, both are important. We will get into detail some other time. For the time being, I hope you have understood a little more about options. If you go through this, if you try to understand, read it again and again, try to understand. And if you have difficulty understand, if you have any questions, if you have any queries, get back to me. My mobile number is available here, or you can get logged into NiftyIndicators.com and get in touch with me. I shall be pleased to explain you and solve your query. Take care. Thanks for watching. Goodbye.